What's going on, my friends? This is David Richard and welcome to this video. In this video, I'm going to show you how you can analyze USDJPY. You're going to use price action as well as the market structure for you to actually enter sniper entries on USDJPY. So without wasting much of your time, let's get into the chart. USDJPY, the spread is very good, especially if you're using Exness. If you want to use the broker that I use, I'll put the link in the description below. You'll be able to get some of the tools that I use for free. So go ahead and open an account with the Exness broker. I've been using Exness ever since I started trading the markets, and I can tell you that it's one of the brokers that I keep on using. Let me show you how you can trade USDJPY effectively. Okay, the first thing that we want to learn about is what I call a cap consolidation. A cap consolidation is a consolidation that is like so, like an arc. You can actually draw an arc on top. Also at the bottom, you can see here it's forming that type of structure, right? This is the arc that I'm talking about. You can actually draw an arc right here. So if you can draw an arc right here, that is the structure that we're talking about. So being able to identify this structure is one of the most paramount steps that you need to, master before you actually learn how to enter these sniper entries. So let's see how we can identify that pattern on the chart. So I'm just going to do this. Let's delete all the things that is on the chart right here, and let's identify. Okay, so we're going to start from here, and we're going to move to this side. So as we can see it right here, this arc. You can see it right here. This is the arc. All right, then we can also move and we can see this is an arc like this, right? If we go down, we can identify this is also an arc. So sometimes it's like in the form of a head and shoulder like this, where it doesn't have too many shoulders, right? And it's a nice arc like that. Okay, as we can also see right here, we have a nice arc, right? Whereby we have got lower lows followed by a low, and then we get some higher highs going this side. Okay, so that's an arc. Also here we have a nice arc, and okay, if you also see arcs that I'm not seeing, I mean, you could be pointing out. You can see here it's another arc. I think this is the one that we're talking about when we just started this video. And look at this arc right here, an arc. Okay, this is not an arc because as you can see that it's coming from the top and it's just going down. There is no arc. Okay, there's no arc. So we're looking for an arc, right? An arc shape. Like here we have an arc because we are starting at the bottom, come here, and then we're going up. So we've got an arc right there. Okay, we have an arc. Let's check other arcs right here. We also have an arc right there. We're starting from the top, going like that, and we reach the top, and now we start going down like an arc, right? So it's like an arc. Okay, that's an arc for you. Now let's talk about the strategy. Let's go back. How you're gonna use the strategy for you to identify sniper entries on your USDJPY. You can also use this on other instruments. Try it, but I actually just back tested it with USDJPY. So right, I'm here properly, and we can see that there's another arc here. So we'll put an arc right there. Good. Since the market is going up and we have an arc that is facing downwards, this is the arc that we actually want. An arc that is facing downwards when the market is going up. We can see that the market has been going up, and we have an arc that is facing downwards like that. Okay, so our arc is facing downwards. Simple as this. The arc is facing downwards. Now we want to see where we can enter a buy. Okay, a buy will only be entered after the arc has been, the base of the arc, this one, has been broken. We can see that this arc's base, it's right here. Okay, so where now do we enter? We go back here, then we check where there is a zone. Okay, so the next zone that is here, the next zone that you can find from an inverse structure. So what do I call an inverse structure. An inverse structure is a structure that is like this. Then if our base now is at the bottom, we look for a base that is on the top, the nearest base that is on the top. So you can see that the nearest base that is on the top is this one right here. Okay, so this is what we call the inverse base. Okay, so here now let's just extend this, right, and see where the market is going to come to. Okay, so this base right here, we can extend it like that. So here, this one, we don't really need it, unless if this one here doesn't hold, we can definitely enter at this one because this is an inverse base. Okay, so let's go and put our, okay, so as we can see that the market hit here, right, and it went down, right? So if you entered a buy here and your stop loss was very tight, you would have been taken out. But as I said, we also have an inverse base that is here. Okay, right here, the inverse base that was here. Okay, so you can either enter right here or you can enter here. If you choose to enter here, just know that you might miss some of the moves, because some moves will just, you know, be entered at this base and then it will go up, but you can enter here. Okay, so you can see that this is our very good entry that happened right there, and you can take profit at the next structure right there, right? You can take profit there, or you can, you know, keep on moving with it, or locking profits as you go up. Okay, so as you can see, this was a very good way to enter a sniper entry. You could have entered right there. Even if you get your stop loss get hit, you wait for it to come back here, you know, to come at this base, and then you can just enter a buy again. So let's do other examples and see. Okay, so what are we looking at? The first thing is we look at the how the market is moving. As we can see that this market is moving down. How do we see that this market is moving down? Just check where the market is starting, right, to where it is right now. It's moving down. So when it's moving down and we see an arc, right, let's delete that. When the market is moving down, we determine that the market is moving down, so that's fine. So we can see that we have an arc right here. So if we have an arc, we want the market to continue moving down, but we have got an arc right here. Right here, you can see the arc right here. Okay, so the market kept on moving down, right, and we didn't have a trade right there, because what we wanted was the market to violate this arc, and then we can enter it on the next inverse base. Okay, the next inverse base is somewhere right here, where the inverse base is. We could have entered a sell right here, okay, and continue the market, but the market unfortunately had too much momentum, so it kept on going down. So this setup didn't play out. So let's move on and see. So the market is going down. As you can see, the market is going down. All that we want is to see an arc formation, right? So we can see an arc formation happening right here. Arc formation happening. Now we have to determine what is the base of that arc. So we can see that the base of that arc is right here. Okay, so the base of the arc is right there. Then where is the next inverse base? So we've got number one, this one right, that is here, and the second one is right here. So our first entry preference is right here. Okay, but if this doesn't hold, we can also enter a sell right here. Okay, so now it will obviously drop, right? You can see right here what happened. It obviously dropped. Okay, as you can also see that the market even respected this base right here. Okay, so it's all about, number one, finding with the direction of the market. Then you have to find a base, and you find an arc. Find an arc, then find its base. And when you find its base, now you have to look for an inverse base that is on the opposite side of the trade. So we're gonna do more examples so that you can you can grasp this. Okay, so I'm going to delete. The market is moving, we're moving with the market. We have to check if we can get an arc. So here we're always scanning to see if the current market is presenting an arc. So as you can see, the current market might be presenting a smaller version of an arc right here, where the market gets down and then now it's going up. Okay, and we are in a downtrend. So where is the next inverse base? It is right here. The inverse base is right here. Okay, so that's why the market entered there and then it fell down, and our next inverse base was right here. Okay, we can't call this the inverse base because remember, our base for our arc is on the highs. Okay, you can see it was on the highs. So an inverse base must not be on the highs, it must be on the lows. Okay, so this is an inverse base that is valid, not this one. Valid inverse base, valid inverse base, and also a valid inverse base starting from here. Okay, it can't be a valid inverse base when the base is actually on the high. If your arc is an arc that is inverted like this, it means the base will be on the high, the base being the other side that is not the arc. So this is our arc, this is the other side, right? This is our base for the arc. Then an inverse base must be a base that is considering the lows. That's why you can see that the market hit here and went down. If we can extend this as well, you can actually see that this is actually being respected. It's a sniper entry going down. Remember, we are also following the trend of the market. Okay, so truth be told, I didn't know what the market was going to do. Actually, I didn't backtest this part of the chart here. So it's my first time just seeing this chart. So you can be rest assured that this method works because I'm actually, finding entries as I go, and all the entries that we found so far have given us profit. Okay, so let's delete everything. I'm going to delete everything. I'm going to find another arc. Okay, so this is a good example of another arc, right? So we see the arc, it came here like this and it also went up like that. So where is our base for the arc? We want to find a base for the arc. We can come here and have a base for the arc. Okay, we have a base for the arc. Now where is the next inverse base? The next inverse base is right here. As you can see, this is our next inverse base. That's why also it was also right here. Okay, remember, this is our arc, right? And our inverse base was right here. From here, this is a low. Okay, so that's why the market didn't go as far as up there, because there was an inverse base that was close enough to give us this trade that went down like this. So this is very, very good. Okay, so once you have mastered the inverse base and the base of an arc, you'll be able to enter this market properly. So let's go again. We're going to find a trend. So we're still in a downtrend. As you can see that the market is going down. You don't need to crack your head. If you want to know the downtrend, listen, you want to know the downtrend, just take your arrow here, go to where the market is starting, and then go to where the market is ending. It's obviously falling down. So it's falling down. All that you have to do is find selling opportunities. So we are finding selling opportunities whereby you have to find a base that is facing a direction like this. Okay, so you can come here. This can be considered as an arc. So then arc where there are lower lows, lower lows, lower lows, lower lows, giving us also a rise of higher highs, higher highs, higher highs. We can consider that safely as an arc. And let's put our arc base right there. Okay, so we get our arc base right there. Okay, so that is our arc base. Now we want to find our inverse base. Okay, the first inverse base that we can find is right here. Okay, this is the closest to the price, so let's put it right there. The second one is this one that we can actually see here. It's very visible right here, and we get a third one right there. Okay, so we got a couple of entry positions that we can enter if we want to enter in the short term. Myself, I would like to test all of these bases, putting a stop loss. If I'm out, I'll try the next one. If I'm out, I'll try the next one. It's as simple as that. So let's check what's going to happen. The market is expected to come to this base right here and react. So it came to this base right here, and we didn't see a significant reaction. So it's actually a loss that we could have encountered there. But when it comes to this base, we can see that the market reacted. Right, the market reacted. So it's all about you choosing the whether you want to wait for the second one or you want to enter for the first one. Remember, if you don't enter the first one, the market might leave you. Okay, so it depends on you if you are willing to, you know, let the market leave you sometimes, but be safe. Okay, or you want to enter as many trades as you can, but whilst also managing your risk. Okay, because here I could have entered the market as soon as the market hit this base and put my stop loss right on top right here. So I could have entered and put my stop right here and my stop loss right there, and my stop loss would be hit. And when the market hit the next base, I'm entering with my stop loss at the top of that base, and I can actually enjoy all of this profit right here. Okay, so this is how you can actually, you know, trade USDJPY with sniper entries. So I'm gonna give you more examples so that you can grasp this concept of the arc and base. Okay, so as we can see also here, we've got an arc right here. Take for instance, you were not trading this arc that we found here, then you were here, you can find an arc right there. Okay, now you have to ask yourself, is this market going up or down? You can actually see that when the chart is like this, the market is actually going up. If you can put your pricing like this, you can actually see the market is going up. So the market is going up, and then we have gotten a nice base that is forming an arc that is forming on the top with a base that is on the low. This is what we actually need. Okay, so we come here and get our base. Okay, now we're gonna find an inverse base. Okay, so we can find inverse base here because you can see that our base for our arc is on the lows. It's on the lows, but we can find a base that is on the highs. Okay, so if we can find a base that is on the highs, right, this was actually a very good way to actually enter a buy. So that's why you can see the market came here and it went up a little bit right there. Okay, so you can see from here to here, it's actually some money that you could have taken because of the inverse base. Okay, so let's delete and go to the next. This is very simple. You don't need any bias, or the bias that you just need is the bias of the chart that you're looking at that particular time. You don't need to go into another time frame. You can see that I'm on 1 minute time frame, so I'm killing it on the 1 minute time frame. That's all that you need to be doing. Okay, so now let's check again. Okay, so we're moving. Okay, we're moving. Take for instance, you are right here, right, and the market is going down, but you have seen that there is an arc. Undeniably, we can see that we get an arc right here that is forming, and we've got a base. Okay, and you've got a base. Okay, where is this market going? You can see that this market is going down. So here it's kind of conflicting because we get a formation of a selling. We're in a selling. Actually, we are in a selling. We have got a selling market, right? We have a selling market, but we are getting a formation of a buy arc. This is what we call a buy arc. Any arc that has got its base on the lows, it's used for buying. The one that is used for selling is the one that is inverted, that is like this, and the base is on top like this. That's one that we use for selling, but we're getting an arc for buying. All right, so let's check if this market can present us another. All right, so you can see that this was a buying arc and we can't trade it in a selling market. So that's why how you can filter some of the trades that you can be making mistakes on. All right, so let's move. You can see that the market kept on buying right there. Let's take, for instance, we are here, right? We can see the market is up. Market is up. Okay, the market is up, and then we're gonna find what? An arc. Okay, let's find our arc. We'll find our arc like this. My apologies. An arc here will be this one right here. For buying continuation is an arc that we will find like this. Okay, this is an arc, and then let's get for the base of that arc. Okay, now let's find an inverse, the inverse base. Okay, if you having any issues, just come here and actually extend it here. An inverse base is a base that is on at the bottom. So you can see that we've got a base that is at the bottom right here. Sorry, at the top. My apologies, because here it's a buy. So an inverse that is at the top. My apologies for that. Okay, so we were supposed to place a buy right here, but what happened? We didn't manage to make profit, so that is a loss. Then we get another base right there that gave us, you know, just a little bit of profit. But by this time we can actually see that the market has changed. The market is actually going down. So here we didn't lose anything because we lost in the first trade, but we made money on the second trade. But you can see that the market is going down. So what are we looking for? We're looking for arcs that actually give us selling opportunities. Okay, so an arc for selling opportunities, an arc that has got its arc at the bottom and the base at the top. So let's see here. Yeah, we can find a nice arc right there. Shoop. Arc. Okay, so once we have identified this arc, let's have the base of that arc is now at the top like this. So we got an arc at the bottom and the base at the top. Okay, so what's the next? An inverse base right here. Inverse base. So we're gonna enter the market right there, and let's see if we got another inverse base. We got another one right there, just in case this one doesn't hold for sales. Okay, so let's move. Okay, let's extend that. Okay, so as you can see that the market didn't come to our bases, which is totally fine. Sometimes you can miss some trades. You have to work according to your plan. Okay, so let's delete everything. All right, we're going up. Okay, so now we see an arc formation trying to happen right here. Market went up, then it went down like that. Okay, so this was a time of the news. So you can see that the market here didn't respect anything. It just reacted off the news. Okay, which is something that you want to avoid, trading news. Okay, so let's go for another one. The market is going down. It's going down. We can see the market is going down. So what we need is an arc like this. So you can see we've got an arc right here. It doesn't matter the shape of the arc, as long as if it's an arc, then we've got a base of the arc, right? So we need an inverse base. This we don't consider. You know, whichever move that was done by the news, we don't consider. So what's the next inverse base? As we can see, it's right here. Okay, now how do we enter that? Okay, so we couldn't find an entry. It's totally fine if you don't find an entry than for us to enter the market and lose. Okay, so we can see right here we need to check and find our base. Okay, so the market is going up. Now we get our arc, and this is our arc. Then we got the base of the arc right here. Now let's get the inverse base. Okay, so as you can see that there is a base right here that didn't touch our inverse, our arc base. There's an inverse base that didn't touch our arc base, so a buy can be entered there. Let me see. If that doesn't work, we're definitely going to enter a buy right here, and I'm sure it's going to hold. So let's go. Our buy here gave us good profit from here to here. Sniper entries, we're only doing sniper entries. Nice entry that happened right there. I think I also left out a base that is here, inverse base, that caused the market to go up right here. Okay, so that is your inverse base coming to you right there, and with some big profits, right? So as you can see, guys, it's all about finding the bases. Okay, here I left out this base. As you can see that I found this base, I left out this base, okay, which was the one that actually caused the market to go up. So it's all about finding the arc, base of the arc, and the inverse base that is going to give you the entry position. If you don't understand this, let me know, or if you understand this, let me know in the comments below. Let me know what you think. If you use this method and you made money, let me know in the comments, and I'll also give you some other strategies for other instruments. Okay, so your response is going to determine how I'm going to actually be providing information in the future. With that being said, ladies and gentlemen, this is a free strategy by David Richard, and use it, make some money. And when you make some money, I don't need anything from you. Just comment in this video and tell me your experience using this strategy. That being said, ladies and gentlemen, see you next time. David Richard, I'm out.